Today's content is brought to you by Algorand, which is the official sponsor of the Thinking Crypto channel and podcast. Algorand is building the technology to power the future of finance, the convergence of traditional and decentralized models into a unified system that is inclusive, frictionless, and secure. It is founded by Turing Award-winning cryptographer Silvio Micali. Algorand has developed a blockchain infrastructure that offers the interoperability and capacity to handle the volume of transactions needed for DeFi, financial institutions, and governments to smoothly transition into FutureFi. The technology of choice for more than 700 global organizations, Algorand is enabling the simple creation of next-generation financial products, protocols, and exchange of value. For more information, please visit algorand.com. Hi, everyone. Welcome back to the Thinking Crypto channel, your home for cryptocurrency news and interviews. With me today are the founders of Algofi, John Clarke and Owen Colegrove. John and Owen, great to have you on the show.
Great to be here. Thanks for having us.
Thanks for having us.
Well, I am excited to learn about Algofi. We were talking before the recording. I am a big Algorand fan. I hold the Algo token. So I want to learn about what I can do with Algofi and start earning, lending, borrowing, so on and so forth. But before we get there, let's start with both your backgrounds. Maybe, John, you can kick us off. Tell us about yourself and where you're from.
Sure. So, I kind of studied math and CS in college. And I've always been kind of enthusiastic about crypto. I actually got into crypto back in 2014 when a student group gave every undergrad at my college $100 in Bitcoin. So it was kind of a cool way to start playing around with crypto. Like I started trading it, studying the markets and just the developments in blockchain technology. And, I was really interested in markets. So after I graduated, I spent some years in traditional finance when I was working in the hedge fund space. And that's where I met Owen. And we were working on, the same team at a hedge fund in New York.
Sure. So about myself, I came from an academic background first. So I studied physics in undergrad. I did my PhD in physics. I was doing research at CERN, a lot of data analysis, and a lot of modeling. But I guess I've always been interested in crypto at the same time. So I first really got into ETH in 2015, reading on Reddit, seeing the community there, realizing that the future was in programmable money. I got super excited about that. Like I started mining ETH, I started playing around with it. And, one thing came to another. I got too busy with other stuff. I finished my PhD. I went on to work in quant finance where I was making trading strategies. And I guess I was always kind of following the space on the side. And around last year in the DeFi summer, I started to get really strong conviction that the ecosystem was really something incredibly innovative and would have long-term drastic consequences on our financial system. So I felt like for me, it'd be more interesting to go help build the new financial system rather than work inside of the old one. So I kind of started looking to what I would do exactly and planned to leave my job. And in April of this last year, left to get involved.
Very cool. I'm going to ask a question, and it's, okay, if you can't fully disclose everything, but I'm curious what each of you hold in your crypto portfolio today.
Sure. So in my crypto portfolio, I have it about half weighted, if not a bit more, in algos. And the reason for that has a lot to do with why we chose to build on the Algorand blockchain. I think it's very undervalued by the market. I think when you look at the performance of Algorand, the throughput, block time, transaction costs, you look at the early community, the enterprise, relationships that they're building out, it seems to be extremely undervalued. I think it's something that can easily compete with the leading L1s, if not overtake them. And so, in both my professional life and my personal, account, I really am bullish on Algorand. And then outside of that, it's mostly just yield farming, stablecoins.
Yeah, so similar to John, I also have a pretty big algo allocation. And I like to play around with some of the existing DeFi protocols there. So there's Tinyman, there's Yieldly, there's our protocol now. So there's, a bit of a vibrant ecosystem emerging there. And then I also have money like across various different blockchains, but nothing too concentrated besides ETH, which I feel like is a fairly smart bet just in general to have some of your money on.
So where did the idea or the genesis of the idea for the two of you to come together and to build on the Algorand blockchain and say, hey, we're going to build Algofi and build out these respective DeFi features for Algorand?
That's a great question. I think it wasn't so vivid what we were going to do. It was more of a general feeling that, look, there's a lot happening in this space and a ton of opportunity. So why don't we put our heads together and start figuring out like what is the smartest thing for us to do? And that was the lens we kind of approached it with. And we went through Y Combinator. So that's a bit of I would say a non-conventional path for crypto companies, because that's how more traditional Silicon Valley based companies have typically started up. But we felt like that was a great way for us to get a wider audience. And we were kind of looking to do something more general to work towards opening up the crypto space to more participants. And that was always kind of the lens we took. And I think looking at it through that way is part of what led us to Algorand, because there you have scalability, you have cheap transactions, you have a blockchain which is really orienting itself towards broad mass appeal. And so we kind of saw really strong alignment with what we were trying to achieve and the ability to come and start working on what we thought would be the next level of innovation for DeFi.
And were there other blockchains that you explored in your path to making the selection of Algorand that you're like, what about this one? Let's take a look at this. Maybe you can walk us through that thought process and process of elimination, if you want to call it that.
Yeah, so when we were going through Y Combinator, working on this first product of sort of expanding access to crypto applications and blockchain, we started, with Ethereum. We were kind of looking at the blockchain that had the most liquidity, but we quickly realized that, these sort of older incumbent chains can't really scale. Like they're too slow, they're too expensive, and they won't have the kind of TPS you need to support the new financial system. So we were looking at a lot of L1s in, around early August. We're looking at Solana, Avalanche, Algorand, Terra, and we really got sold on Algorand because we think that the performance is very strong, like the three key areas I was talking about before, but it also remains very decentralized. The algorithm that they've developed for their consensus, the pure proof of stake, is very efficiently designed so that you can get the performance while not trading off decentralization. And in this way, they sort of solve the blockchain trilemma. However, some other chains, while they can achieve good speed, they can achieve good costs, it's not clear that they can achieve decentralization. And when you think about blockchains becoming a core feature of the financial system, it's not an acceptable result that they are super centralized. Large institutions won't feel comfortable putting their money in chains where they feel like there is this sort of control by key parties. It needs to be the risks need to be diversified. So we think Algorand can really achieve that.
Absolutely. Tell us about Algofi and the features. Obviously, there's lending, borrowing, stablecoin. Tell us about what Algofi is bringing as far as features.
So similar to Compound and Aave on the Ethereum blockchain, we let people come provide collateral. In exchange for providing collateral, you earn interest and you get the right to borrow. So what you can do is you can come in, you can provide your algos. You'll start earning additional interest on them versus just keeping them in your wallet. And then you can also now borrow, say, USDC, and you can do whatever you like with that. So it goes into your wallet. You could settle it into fiat, into your bank account. You can go to other exchanges and trade it into other assets. So basically, we're opening up new trading opportunities for current participants in the Algorand ecosystem. Now, you also mentioned the stablecoin. That's a new innovation we've introduced with our protocol, where rather than necessarily having to use a what's called fiat pegged or like dollar backed stablecoins such as Circle's USDC, you have the option of taking out a loan in what we call AlgoStable, which is an algorithmically pegged stablecoin. And maybe you want to get into that, John.
Yeah, so AlgoStable is programmatically, pegged, where it, by definition, will always have at least $1 worth of collateral backing the coin, and this comes from the various collateral pools we have on Algofi. So right now, that's USDC, Bitcoin, Ethereum, and Algos. So that that's sort of what keeps it pegged, and it's based on the collateral factors that are being used. And it's it's a great boon for the ecosystem, because currently the only stablecoins available are fiat pegged. So we wanted to offer the first algorithmically pegged stablecoin that we think can grow and scale with the Algorand community. Similar to the fact that DAI sort of grew with Ethereum, and that became like the branded stablecoin of Ethereum. We think that we can build out the premier stablecoin on Algorand that also solves some capital efficiency issues. So, we've basically merged together the lending and stablecoin concept, while on Ethereum, they are separate. You have to in order to generate DAI, you need to over collateralize that with Ethereum or other assets. And then to post it and borrow against on Compound, you need to over collateralize with that again. So we're sort of solving capital efficiency issues as well by putting that into one product.
To clarify, and I want to make sure I didn't miss this, you're saying this Algo stablecoin or AlgoStable, it is not backed by the US dollar one-to-one, it rather a basket of currencies or various currencies?
So rather, actually, it's a native coin to the protocol. So similar to how you could borrow USDC, which other people might supply, embedded into the protocol is AlgoStable, which people can post collateral and borrow through the protocol. And now it's over collateralized. So, theoretically, I would have had to put, say, $1.50 of algo into the protocol to take out one AlgoStable, which is worth $1. And through various mechanisms, which we can get into later, it will hold that price of $1. And so what we've done is we've introduced into the protocol this concept of an algorithmic stablecoin, which on other DeFi ecosystems such as Ethereum has traditionally been a separate entity. So there's something called, say, Compound on Ethereum, which is like a lending market, and the MakerDAO, which is the protocol people use to create their stablecoins at. And we've kind of put these two together into one. And in doing so, we've really reduced inefficiency in the market. We've made it so that people can draw the stablecoin out with less collateral and at lower rates. And so fundamentally, we're kind of helping Algorand to start from a stronger basis. So the DeFi ecosystem, as it grows, is going to have primitives that are more flexible and more efficient than what have been built out on other protocols. And so this was on other blockchains. And so this was kind of one insight we had while we were building this, was that we had a chance to really make this system more efficient than the other ones that have come before it.
Got it. And if users listening wanted to get started with maybe the borrowing, the lending, things like that, what would be the next step, and what would they have to do?
Sure. So you would have to first get an Algorand account, which, the information for this is publicly available. You can use the Algorand official wallet, or you could use the MyAlgo wallet made by Rand Labs. And so these are some of the key wallets. And from there, you can on-ramp using Algos. It's probably the easiest thing, or Algorand-based USDC. And, in order to get into other assets, you can trade on Tinyman, which is, the first Uniswap style AMM launched on Algorand. Another thing you could do is use this other product, Algomint, which lets you bridge Bitcoin and Ethereum to the Algorand blockchain. And so we're actually, the Algofi protocol has their assets, the GoBTC and the GoETH assets. So anyway, with your USDC and Algos, you can trade that into a variety of assets and then come to Algofi to access leverage against them. Or if you just want to lend them to earn passive income, you can do that as well.
Now, a big question I'm sure many folks are going to have is security. If you can tell us about your security layers and protocols and so forth, where folks want to make sure, hey, our funds are secure, et cetera, et cetera.
Yeah, definitely. I think from day one, the first and most important emphasis we've had is security. There's been a lot of hacks in the DeFi space. There's been a lot of mishaps. And so we use that as something we can learn from. So, we went through an audit with runtime verification. We independently, as a team, have, rigorously reviewed every line of our code several times. And the goal here is to make sure that every single part of our protocol functions exactly as we expect. And so, for instance, if a user comes in and borrows, we've really rigorously, extensively checked that they have sufficient collateral to do so. They can't in any way kind of trick the system into thinking that, I have this other person's collateral, or, I can take the funds without checking. All these different edge cases you have to consider, we've carefully thought through. We've found ways to test and really make sure there's no issues there. So I would say that's just kind of been like our mindset and approach, is to really write tests for every single thing we can think of, write down theoretically what we want the interactions to be and verify that they follow, and to work with other third parties to, extensively cross-check our own work. And then beyond that, at our launch, we've taken more conservative steps to make sure that we're really doing our due diligence. So we're slowing the growth of the protocol by capping liquidity early on. This way, you kind of go under the radar. You have time to run it live and make sure every single thing is working exactly the way you expected. We ran on the test net for 3 months before we went to mainnet. Also, that was like another set of thorough cross checks we had to make sure everything was as secure as possible. And I guess these are kind of like the main core tenets. Is there anything else we should add, John?
Yeah, I think that's most of it. Like we've sort of, as we've been checking these contracts and anything we build, we just assume that the end user is a malicious actor, which of course in the average case is not going to be. But when you're a security expert, that's what you need to expect or test for. So we try to envision what are all of the possible attack vectors. So we have thousands, of attack vectors that we can construct internally that we've assessed against the system. And we've, based on our work with runtime, we find the protocol to be highly secure. But, beyond that, we're offering bug bounties. So for anyone that can identify issues, we're offering substantial cash payments for people to, help us improve our protocol if there's any failing. And, I think that's fairly common among the major DeFi protocols. And we want to make sure that we're compensating sharp users for identifying issues.
And I guess one other point just to add on here is I think the Algorand ecosystem is a lot safer than other ecosystems at this moment.
Sure.
Because there's not a bunch of these so-called decentralized bridges. And what these are nice because they enable funds to more freely move across blockchains, but they're somewhat bad, right? Because a bad actor could steal the money from a protocol, send it to another blockchain where there might be technology that helps make that money untraceable. And so they can twirl the money around and basically make it very hard to map back to them. So, in general, I think Algorand's a very safe ecosystem to interact with right now because these bridges aren't there yet. And in time they may come, but at least for the moment being, in these early stages, we think it's very safe for the user because there aren't a lot of these scary things that exist in other ecosystems. And there aren't as many hackers yet paying attention because of that.
Right. And would the service be available for both retail and institutional investors or users, or is it just one right now, and then maybe the others coming later at a later time?
So, the protocol, we launched the protocol on Friday, and right now anyone that understands how to manage an Algorand account via MyAlgo or the Algorand official wallet, which is the hardware solution, can interact. So, we've had some institutions, on board, plenty of retail has. I think, in the beginning of the protocol launch, we're going to expect a lot of the liquidity to come from the retail side. specifically within the Algorand community. And then in the coming months, as we launch, rewards and liquidity incentive programs outside of the Algorand community, just in the broader DeFi ecosystem. However, we're going to make strides in 2022 to open up access to larger institutions. One feature is a lot of hardware wallets don't currently support Algorand DeFi applications because of the data that needs to be passed in order to sign transactions. So some of these are like Ledger or Trezor. So, we're going to see what we can do in 2022 to open up access to these hardware wallets and to multi-signature approaches to signing transactions. Because a lot of the institutions want to use a multi-sig approach, and they also want to use established hardware wallets like Ledger. So that's something that we're going to be paying attention to as we make it easier for institutions to onboard. But right now, for people that want to use a hardware solution, they can use the Algorand official wallet.
Got it. And recently there was news of a $2.8 million funding round that you guys participated in. Could you tell us a bit about who participated and how the funds will be used?
Sure. Our lead investors were Union Square Ventures, Arrington XRP, and Pillar VC. So we plan on using the funds to basically grow as quickly as possible, to put it quickly and sweetly. I think the goal there is to really capitalize on this exciting opportunity to help build the new financial system with Algorand's technology. So we're going to be really working as fast as possible to roll out the innovative new protocols we need to really see the ecosystem start to blossom. So we have the lending market and stablecoin now. I think on our roadmap, there's a number of other pretty compelling opportunities that we are going to be deploying our resources towards. And so, I think basically the plan there is to really dive in and double down on our first bet on Algorand here.
Yeah, we kind of think about the markets that we interacted with back when we worked in the traditional financial space, and there's just so much left to be built, within DeFi and especially Algorand, given how early the DeFi ecosystem is. So we're looking at a lot of things in the derivative space that we think opens up opportunities for users that we're pretty excited on. So things in like options, futures, term structures of interest rates. Like one thing that's pretty interesting is that in the traditional financial markets, the fixed rate, bonds that pay a fixed coupon are the typical, sort of instrument. In the DeFi space, it's actually highly typical for rates to be variable, where they kind of change as the demand from borrowers versus supply moves. So it'd be interesting to see, how that peters out and if there is, space for a term structure of interest rates for people. And this would essentially allow people to hedge the interest rate exposure over some period of time. So they can lock in a rate and they don't have to worry that over the next week, there's a ton of demand for stable coins, which causes their borrow interest rate to increase rapidly. So that's one interesting thing to think about.
Now, yeah, I guess, sorry. Well, one other thing on our roadmap too, I think calling back to what we initially said at the start of this interview here is that we think that opening DeFi up to more users is really, I think, the greatest opportunity in the space right now. And so a lot of our energy and efforts are going to go towards how do we find ways to connect less tech savvy users with this new emergent technology, because we think there's a big gap there that remains to be bridged.
Yeah, absolutely. And on that note, as an Algorand fan and Algo token holder, I've noticed a lot of adoption, a lot of investors looking to help build out the Algorand ecosystem. How does that growth dovetail with what you guys are doing? And maybe you can talk about the benefits as the Algorand ecosystem builds. Is it more liquidity? Maybe you can take us down that road as to what we can expect.
Yeah, I think that, the interest from investors there's a lot of interest there. I think that there's a lot of focus on the DeFi markets right now. And I think a lot of investors, such as, the ones we were talking about earlier, are seeing the mispricing, how Algorand is this really robust, efficient technology that seems to be overlooked by the market. So I think that, the capital will be very helpful to, motivating more teams to come into the DeFi space. Because frankly, that's what's lacking. It looks like we have capital, we have the technology, we just need teams to come in and build out the new financial system. So I think that that capital being there will be, very motivational to get more people in the space. But I also think that, this capital can be a source of the early TVL to help bootstrap protocols, help provide liquidity incentives, and sort of, be a boon for the ecosystem outside of, helping seed the teams.
Now, you guys are obviously building an Algorand. You have folks on the Algorand team also doing their thing. They're building. What is your end goal vision? If we were looking out maybe 3 to 5 years, where do you see Algofi along with Algorand? And I know that might be a hard question to answer, but as far as your vision, and you mentioned some of the roadmap items, but the long-term vision.
It's a really good question. And I think it's one that a lot of people in this space don't really stop and think about so often. I mean, the space is so new, right? Bitcoin is a little over 10 years old now. And so 5 years feels like an eternity because Algorand's been around less than that, right? I mean, the whole space is barely twice as old as that. And look at how much has already happened. I think that for me, my view personally is that network effects are really powerful. And Ethereum has shown that there's this amazing innovative technology that exists, but it can't really support it at scale itself. And so you kind of have this emergent technology, and there's a bit of uncertainty about where it's going to come into fruition at scale. And I think Algorand is incredibly well poised to be the blockchain where DeFi at scale starts to take shape. And so 5 years from now, I think you'll start to see a real multiplicity of high use, very interesting protocols that function fairly interesting financial activity that is starting to get closely coupled to the real world rather than living in its own speculative bubble. And I see the core protocols like Algofi, Tinyman, so basically decentralized exchange, decentralized lending and borrowing at the center of this, because at the end of the day, everything that kind of builds underneath it is in some way a derivative of that technology. So I think you'll start to see this really wide and broad ecosystem where a lot of protocols are built on top of these core primitives that are being built today. And they're maintaining a bunch of functionality that we probably struggle to even picture today, just like people couldn't really see what the internet would look like in the early or mid 1990s.
I was going to say, I completely agree with Owen, and I think that 2022 is going to be a banner year for Algorand. I think there's a lot of things that are boding well for Algorand. The infusion of capital from investors, the Viridis fund that the foundation has launched, all the grants they're giving out to build technology. I think the crypto community, I think there's a very strong chance they sort of see what we saw in Algorand, back in August. And I think we'll see a lot of TVL migrate into the fledgling DeFi ecosystem. So, if we see, Algorand DeFi break $1 billion of TVL by the end of 22, that's not a surprising outcome to me, provided the market remains somewhat calm/bullish.
So on that note, before we go to the full market view, is there anything else that you think you guys want to highlight about Algofi that we may have not touched on yet?
Well, I think, for us, we built the lending protocol and the stablecoin, but as Owen was saying, the vision remains, thinking about DeFi in the context of redesigning the financial system. We want to expand access to DeFi, not just because, there are these interesting trading opportunities or sources of yield. We think that DeFi could become a very meaningful part of the real, the financial system that we use today for our, daily financial activities. And so, with that view, we're sort of building what we think is the new financial system, where people will get access credit, pay, get paid by their employers, or do various things. But, instead of it being mediated by centralized parties where human features like greed, prejudice can sort of cloud good activities. Instead, we have smart contracts that mediate these interactions and provide for, a more open, decentralized financial world. So that's kind of, at least for me, that's what I see as the prize. And it may not be over the next 5 years, but I think over, 10 to 20 years, it's not an unreasonable outcome.
So would it be fair, and you guys can say if you agree with this, but when Bitcoin first came out, there were a lot of the true believers and the cypherpunks who were saying, Bitcoin's going to destroy the banks, but it almost seems like DeFi is going to take that power away and reduce the power from the banks. And I don't know if they're going to destroy the banks, but I think it will certainly, we'll see a reduction maybe in the banking control over the economy and that respective level of power, and the lending and borrowing more decentralized. People borrow from each other versus from a bank. I don't know if you agree with that statement, or you see that's the trend where we're headed.
Well, I think it's an interesting point. And I think like if you zoom out, what Bitcoin really starts to destroy for me is more fiat. Like it's something that competes with governments printing money and defining the landscape of money. Mm-hmm. But banks are something that are really independent of fiat. They're just intermediaries that help facilitate the flow of capital. And so for me, what DeFi is to your point, something that more disrupts that layer of the financial system. It's kind of one layer down closer to the consumer, where, at the highest level, you have something like the Federal Reserve, you have governmental policy determining the flow of money and these different levers they're pulling on. And then the banks, they respond to this and facilitate the flow of credit to and from consumers. In the crypto world, it's similar, where you have blockchains, which kind of determine the economics of their tokens, how supply and demand is going to be constructed. And then you have the people building on top of that at the application layer who are building these primitives, and they're helping to facilitate more directly different consumer demands from that system. And so I do think, to your point, it's DeFi that's going to more disrupt the banking system than it was something like Bitcoin. And I think together it's an incredibly disruptive duo where you can reinvent the very idea of money and then the very system around which it's built.
Yeah, absolutely agree there. Let's talk about the crypto market as a whole. And obviously not financial or investment advice, but what do you guys think as far as the market cycles? Have we seen the end of the bull market? Some are calling for the bear market, or do you think this extends into 2022?
I'll only speak on this because I feel like with some of our experiences in the traditional financial markets, we can maybe say something here. I think December is a tough month because a lot of allocators are selling the harvest tax losses. So that effect is sort of playing into the markets, and I think that the markets before the recent sell-off were fairly bullish. And I think, leverage was pretty high in the system. But so I think locally we could be, at a top, and it, could continue to sell off in the new year. Although I do think with, the loss harvesting ending in December, we could see a bounce in January. I think longer term, there's still so much capital still on the sidelines, like the hedge funds that we were discussing before that are backing Algorand, that, 90% of their colleagues are still not, maybe way more, are still not even in Bitcoin, let alone DeFi. So I think there's still a ton of capital that is yet to get involved. So longer term, I think there's still a lot more room to go.
And do you feel, with macro factors of the economy, like inflation, We see it continues to increase. They said it was transitory. Clearly, it's not. It will drive more capital from the traditional financial world into crypto. I always think back to what Paul Tudor Jones said in 2020, Bitcoin and crypto being the fastest horse in the race.
Right. So I think that the combined effect of high inflation and slow real growth is going to be a real catalyst to driving people into the space of crypto. And more people, I think, get dissatisfied or frustrated with the current financial system. And so we're seeing a big exodus into crypto. And for me, like, part of what's very interesting is the whole GameStop saga, the whole rise of crypto. And there seems to be inside the public consciousness a rejection of the current status quo, the financial system. And I think it starts to get pretty interesting when we think about what's going to happen in the coming years with crypto. I don't think anybody can know yet today, but I think a lot of people who are following the space are getting more convinced that it's going to be something that really changes and disrupts the current system.
Yeah, absolutely. I'm sorry, go ahead.
I was going to say, like, I agree with what Owen's saying. And I think the one issue with crypto is that given the positioning and it's the fact that a lot of retail, which kind of tends to move positions around when the market is churning, it tends to trade with the stock market. So when like stocks sell off locally, you tend to see crypto sell off. And so, this rise in inflation, inflation's not good for stocks in the near term, because that usually means that producers' input prices are increasing faster than they can raise prices on consumers. So stocks tend to dip locally when that occurs. So we're likely going to see that with crypto. But I think longer term, if inflation can't be tamed in the US and the dollar's value continues to erode, you will see capital move into crypto to offset that.
Got it. Yeah, that's a great point. You mentioned that the prices and things like that can keep up with what's happening. Longer term, the asset prices will eventually go up. And it's being patient. I know some people are getting a little bit impatient because of this respective correction. And I'm hoping that the bull cycle continues into 2022, which I think there's a strong case for it, but we never know what may happen. What are you guys' thoughts on NFTs and how that respective market has been booming?
Well, I think, NFTs, so I own a few NFTs actually, some within the Algorand ecosystem. I have an Algo bot, and I think I have some Algo Bros. I think generally the technology is really compelling. The fact that you can sort of pay artists and originators of content programmatically is a very interesting thing to me. I think that NFT market is in its super early stages, and kind of collectibles are showcasing the technology. But in the next, several years, I think we'll start to see more, real, core applications of NFTs. And the early hype around it is sort of just getting people involved.
Yeah, I second that. For me, NFTs are a pretty interesting innovation that has kind of just spawned out of crypto. To be honest, it's not one I've followed that closely or claim to understand that well, but I think it's certainly going to find interesting use cases and probably work to reshape the way that artists monetize their abilities.
Absolutely. I do want to touch on crypto regulations, at least in the United States. There's a lot of moving parts and components. You have the infrastructure bill, you have the SEC trying to, stop as much as they can or slow crypto down. It seems like blocking Coinbase lending. They're going after Terra Luna. There's a Ripple lawsuit. Even though we are seeing a growing support among different Congress members for allowing innovation to flourish and providing clarity, there's still a lot of fighting to be done. From a building standpoint, you guys are on the building side. What do you think about what's happening and what we may see maybe next year?
There's definitely a lot of uncertainty as a builder, and there's not a lot of regulation clarity at this moment. So, you kind of have to read into what's going on, consult with lawyers, and tread somewhat carefully. But on the other hand, I tend to think that at the end of the day, the United States has been a place of innovation. And though there is a bit of a conflict between the end goal of crypto and what a government might want, I think that in the end, there's going to be some way for these spaces to come to terms. And the United States is going to find a way to open the door and make space for builders to come innovate in this space. Because I think the competitive pressures from other countries and the realization that, completely falling behind on this new innovative technology would be bad for everyone. I think that realization will start to set in, and there will be some way to look to build a regulatory framework around what's being done and to legitimize it. And I think in the long run, that'll actually be a good thing for the space, because that's what's going to give more of the average retail customers confidence to come and really participate without having to worry too much.
Yeah, I think that, there's going to be a very creative solution found in the coming years to sort of answer a lot of the questions that regulators have around blockchain and DeFi applications. And so we're kind of just staying on the cutting edge of that and making sure that we're biased on the side of sort of, if, we are seeing things changing, that we're, on our A game to respond.
Absolutely. All right. I want to wrap it up here with some fun questions. Owen, maybe you can kick us off with this one. If you could create your own metaverse, what would it be about?
Oh boy, definitely fantasy related. Game of Thrones came and went. I thought that was pretty cool. Wheel of Time's up and coming today. So, maybe one of these previously published fantasy book series. I think it'd be pretty cool if someone really dove in and made a compelling metaverse around that.
John, what about you?
It's a tough one. I think the one that immediately came to my mind, though, is I used to be a big player of RuneScape back in the day, and I think a RuneScape style metaverse would be kind of cool. Just kind of like a shout out to a video game that I used to play back in the day. But yeah, I haven't thought about that one too much. I haven't really used too many metaverse applications yet, but I am starting to get personally interested.
Yeah, it's still all new, and we'll see what gets built. But yeah, it'd be cool if eventually we can individually create our own world, which I think that's going to be the case eventually. But yeah, that's pretty cool, and invite other people in. All right, we're going to go to some rapid fire questions here, John, such as, what's your favorite food?
Italian food, any kind.
Favorite musician or band?
I like Tame Impala.
Favorite movie?
Oof. I like mafia movies. I think I like the movie Casino the most.
That's a great one, yeah. De Niro and all these guys, yeah. Along with Goodfellas. Favorite book?
It's a tough one. I think one that I really liked that I read recently was this memoir, Hillbilly Elegy. But I also really like sci-fi, so maybe Time Traveler, my favorite book.
And when you're not working at Algofi, what are you doing for fun as a hobby?
So honestly, rebalancing my DeFi portfolio. I spent some time doing that. And outside of that, I like to read a lot. So I like to read memoirs, try to sort of like take a break from the DeFi ecosystem and read about something totally different.
Awesome. Owen, favorite food?
I should have known it was going to be the same line of questions. Pizza.
Favorite musician or band?
Led Zeppelin.
Good one. Favorite movie?
The Dark Knight.
Favorite book?
Crime and Punishment.
And what's your favorite hobby as well?
Rock climbing.
Awesome.
So, on the weekends, I'd love to go to the rock climbing gym when the weather permits, outside as well. I think it's a great way to clear the head and, challenge myself in a different way.
John and Owen, thank you so much for joining me today. Everyone, I will have all the links to learn more about Algofi in the description of the podcast and video. Gentlemen, thank you again, and I appreciate you both.
Thanks so much for having us.
Thanks for having us.